Good morning, good afternoon, and good evening. I hope you are all well and healthy. Welcome to the second edition of the Geneva Association New Technologies and Data Conference. We are very excited about this event. We have more than 400 people who have registered from across all time zones and continents, the Americas, Europe, Africa, as well as Asia. This annual conference convenes the insurance industry and experts outside the industry to explore the ways in which technological innovation, from artificial intelligence to connected objects and Internet of Things, are impacting the insurance sector. We are now all familiar with the great value technology is bringing to customers and to companies alike, in the form of speed, of efficiency, of personalization, and certainly there is more to come. We are also aware of the potential trade-offs in terms of data privacy, data security, or data use transparency. There is so much in our hands as an industry and as society. We are living through a unique and, as a matter of fact, very exciting moment in time where we can establish the terms of our relationship with technology, and we can ensure that it is beneficial to all. Conversations like the ones we will have today aim to drive the thinking on what that looks like in the insurance space and to drive action to help people benefit from these technological advances. In the health area, providers and insurers have particularly rocketed into the future during the pandemic in leveraging innovation and digitalization to meet customers' needs. Our recent report on digital health took a deep dive on this topic and the opportunities available to insurers. It's important that we keep up this momentum, that we continue to push the boundaries of innovation in the name of improved outcomes to people. This is why we have focused part of this conference specifically on health. At this point, I would like to extend our huge gratitude to AIA for co-organizing this conference with us, and in particular to Yuan Siong Lee, the CEO of AIA. Yuan Siong was recently appointed Vice Chair of the Geneva Association. He is also the sponsor of our New Technologies and Data workstream, and it's a privilege for me to have the opportunity to work with him. He was initially supposed to deliver his opening remarks live today. Unfortunately, due to last-minute changes to his travel schedule, he finds himself, as we speak, in a plane, and so he has kindly recorded his opening remarks for us. We will be listening to him in a few seconds, and after these remarks, Isabel Flückiger, who is the Research Director for New Technologies and Data at the Geneva Association, will be introducing the different sessions. I will now hand it over to Siong Lee, and I wish you all a fruitful and exciting conference.
Hello, everyone, and welcome to the Geneva Association New Technologies and Data Conference. On behalf of the AIA Group, we are delighted to organize today's conference on the theme of Insurance in 2030, a future powered by technology and artificial intelligence. For nearly half a century, the Geneva Association has been a leading global platform for exchanging ideas, publishing research on topics of vital interest, and promoting innovation for our industry. I would like to take this opportunity to thank Jad, Isabel, and their teams for putting together a very exciting and insightful agenda. We have leaders from across the industry here today, as well as experts in their fields, sharing their valuable insights and experience on how technology can transform the industry for the benefit of our customers. At the heart of insurance lies the concept of shared outcomes. By taking and pooling risks, we deliver greater value for all of our stakeholders. In this way, we can create a win-win situation for society and economies at large. The core premise of insurance has remained unchanged for many centuries. However, the advent of new technologies and enhanced uses of artificial intelligence has impacted all aspects of daily life and the choices we make, from how we work to how we shop. At the same time, the COVID-19 pandemic has accelerated the adoption of new technologies and digitalization globally. Now, more than ever, consumers are always connected, demanding personalized and relevant experiences anytime, anywhere. For many businesses, harnessing the power of technology is integral to achieving greater automation and data-driven decisions to deliver the best experience for customers. In insurance, it revolutionizes pricing, distribution, and claims through enhanced business models and propositions that are built on innovative and personalized products and services. In the very near future, manual underwriting will be relegated to the past, with most personal and small business products across life, property, and casualty insurance using automated underwriting. Today, many companies use static underwriting where risk is evaluated at inception based on pre-existing conditions, without recognizing the value that can be generated from regular and ongoing customer engagement. This overlooks the fact that much of the risk will be determined by choices the policyholder makes over the lifetime of the policy, helping us as insurers to extend the critical role we play in protecting families and benefiting society every day. That role has never been more important than it is now. Technology, artificial intelligence, and digitalization bring massive potential for greater personalization, lower costs, improved claims processes, enhanced risk management, and a reduction in adverse selection. Leveraging big data, cloud computing, and other new technologies can fundamentally alter how insurance products are priced, sold, and supported, as they change the traditional parameters used for decision-making. Ultimately, the role insurance plays in making significant and positive contributions in the lives of communities can be further extended as technology supports the expansion of risk pooling. With increased potential for taking on previously uninsurable risks, driving ever greater financial inclusion and shared outcomes, which creates a virtuous circle for societies and economies. Today, Johnny Broomberg, CEO of Amplify Health, will tell you more about the transformation of healthcare delivery and health insurance through technology. Amplify Health is a new health insurtech company that uses data analytics and health technology assets to transform how individuals, corporates, payers, and providers experience and manage health insurance and healthcare delivery. Johnny's keynote speech will illustrate the shared value model with practical examples of how new technology can be used to attract and select risks, change behaviors across the healthcare continuum while retaining and growing customers. This will be followed by a lively discussion on how do we extend health insurance to more people using digitalization, moderated by Bernhard Kotanko, Senior Partner at McKinsey, and joined by an expert panel comprising Sirma Boshnakova, member of the board of Allianz, Axel Baur, Deputy CEO of Amplify Health, and Patrick Conway, Chief Executive Officer at Optum Care Solutions. As our reliance on technology and artificial intelligence grows, so does the debate on potential threats, novel ways of data collection, analysis, and usage can significantly boost productivity, but will inevitably result in the elimination of some traditional jobs. The OECD has estimated that 1 in 7 jobs will be lost to automation, with low-skilled people and youth among those most at risk. Investment in employee education and training is therefore crucial to ensure a workforce that is both adequately skilled and can adapt to the new technology-driven era. Additionally, the benefits will be diminished if customers do not trust us to act correctly. The Geneva Association has undertaken valuable research on the importance of the responsible uses of data in our industry, identifying transparency, explainability, and fairness as being fundamental to counteracting discrimination and bias, as well as other ethical concerns. Finally, as new regulations and governance structures emerge, this can be an opportunity to replace uncertainty with clear guidance while prioritizing innovation. As the application of technology and data continues to mature and becomes ever more pervasive, it is vital that leaders harness the vast opportunities in a responsible, fair, and sustainable manner. Our second panel will focus on how insurers can strike the right balance and will be moderated by Biswa Mishra, Chief Technology Officer at AIA Group. Joining him are Charuki Bussareed, Head of AI Governance and Thought Leadership at Axel; Mariam Dugan, Aviva Chair in Risk and Insurance and Professor at Nottingham University; Adrienne Lebec, General Manager and Head of Strategy, Chong'an Group; and Girish Nayak, Chief Customer Service Operations and Technology, ICICI Lombard. I hope you find today's conference to be insightful and thought-provoking, with much to take away and think about. In closing, I would like to express my gratitude to today's speakers and to our audience for giving us your time. Thank you.
Thank you to Lee Yuan Siong for the opening address and to AIA for co-organizing today's conference. And welcome to everybody to our second New Technologies and Data Conference, where we explore the AI and technology-driven future of insurance. Today, we will have a closer look at two aspects: health insurance and health delivery, and then the responsible use of data. If we have a look at the agenda, first, we will have the keynote speak of Jonathan Broomberg about the transformation of healthcare delivery and health insurance through technology. Then we will have a short break and then follow the first panel, where we then discuss how do we extend health insurance to more people using digitalization. After another break, we are then moving to the second panel with the title, Using Data Responsibility for Innovation. How can insurance strike the right balance? Before we start, I would like to do the housekeeping. The conference is being recorded and all attendees are muted by default. There will be an opportunity to ask questions during each session. This can be done in two ways. You can write a question in the Q&A tool, or you can raise your hand and ask them a live question. In both cases, we ask you to state your name and the company or organization before you asking the question. If you have any technical problems, you can report them in the chat. And now, I wish you an exciting conference. Let me now introduce our keynote speaker. Jonathan Broomberg is CEO of Amplify Health. a pan-Asian insurtech that is developing and delivering tech-driven healthcare across Asia. And he's also CEO of Vitality Health International. He's one of the most renowned global experts in technology and behavior-driven healthcare. Thank you for being with us. The stage is yours.
Thank you very much, Isabel and Jad. And thank you to Yuan Siong Lee for his very kind introduction. It's a great pleasure to be with you here today. I think as Jad mentioned and as Yuan Siong has mentioned, this is a very hot topic for all of us in health insurance and healthcare globally right now. And it's my pleasure to share a few of our thoughts with you from Amplify Health. As has been mentioned, Amplify Health is the creation of two great insurance companies, both AIA and Discovery. And so what I'm presenting to you today is really a synthesis of much of the work that's been done in both of those businesses and which we are now bringing to Asia, through the vehicle of Amplify Health. If I could get the next slide, please. What I'd like to then cover today briefly, ladies and gentlemen, is some brief background, and then really to spend most of the time looking at some specific examples of how technology and digital health tech in particular is and has the potential to dramatically transform both health insurance and healthcare. And then I'll show you a few results of how this has been applied and the impact that it's had certainly in our Discovery businesses in the last few years. Next slide, please. Hopefully the observations on this slide will not come as news to any of you. If you look anywhere in the world, you will see that these trends are impacting healthcare systems literally in every single country. We're facing ongoing cost inflation. It's a result of aging populations, of people living longer, as well as general demographic trends, a dramatic increase in the incidence of chronic disease, and as a result, more recently, of COVID, really growing imbalances between demand and supply for critical skills in the healthcare workforce, and of course, the convergence of online and offline. So these trends, if any of you have been watching them, and I'm sure most of you have been building up slowly, actually for some decades. As is the way with these slow-moving trends, they develop very gradually and then they happen very suddenly, just the same way that companies go bankrupt. I think it's pretty clear to all of us that the COVID pandemic, which is now 2 years old and continuing, has kind of exposed the cracks in public and private healthcare systems. It's shown, that more needs to be done more quickly across public and private to address these significant challenges. And that makes the role of technology and digital health technology even more urgent than it was before. I think it's useful in the context of the Geneva Association to also recognize that in many countries of the world, existing private health insurance models are somewhat out of date. Many of them were designed in the 70s and 80s and maybe the 90s. In other words, in the last century, they have not kept up with the needs of consumers or the healthcare needs of systems. And so one element to focus on as we look at health tech is how can health tech be a platform for delivering new health insurance models that are much more aligned with the needs of consumers and with the needs of healthcare systems. So hopefully, just by sharing a few examples with you, I will be able to share that with you and to try and cover some of these issues. Next slide. Yuan Siong mentioned this concept of shared value. I think this is now very well known all around the world. The initial concept pioneered by Professor Michael Porter at the Harvard Business School. But inside Discovery and in AIA as partners, we think in our regions we have and continue to pioneer the idea of applying this concept of shared value to healthcare systems and to health insurance. And, you know, I think if you look at my racetrack here, starting with number one, and I'll give you more detail here. The basic idea, as Yuan Siong mentioned, is that, you know, risk in insurance is behavioral. It's not static. It can be modified during the life of a policy by changing behavior. And the core idea of shared value is use technology, change behavior. And by the way, in healthcare, what's very interesting is the behavior that I'm referring to is, of course, the behavior of members or policyholders. But in addition, in healthcare, it's also the ability to influence the behavior of healthcare providers. In other words, physicians, hospitals, and other providers. And if together with member behavior, we can change provider behavior, you can see at point 6 on this cycle, there is the ability to dramatically change the health claims ratios to improve the health insurance performance. Now, in a typical business model, in a not shared value model, that better management of risk through behavior change would be retained as surplus and perhaps distributed to shareholders. The key point about shared value is taking a material part of that new surplus and sharing it back to those who created it. In other words, to policyholders through lower premiums and or better benefits. And in healthcare, very much to providers. So finding mechanisms to reward those hospitals and physicians and other providers who deliver higher quality at lower costs. In other words, who also create more value. And if we can create this cycle, then as Yuan Siong Lee said, this can become a virtuous cycle, which continues to feed on itself. Next slide, please. Let me share some examples with you. Next slide. We like to think about health insurance along this value chain, where one thinks firstly about how do you attract good risks into your pool, how do you select them wisely, and how do you price smartly for them. Once you have your insurance pool, then how do you change client behavior and provider behavior? And of course, how do you retain the best risk members? And so this value chain is what has, if you like, inspired a huge amount of our work for 20 plus years in Discovery. It's at the heart of AIA's business model now, and certainly is right inside the DNA of Amplify Health. Next slide, please. What I'd like to do now is use the example of the Vitality program, which is very much embedded in AIA, in Discovery. We also have many other global partners in Vitality, many of the major insurers around the world. And Vitality operates in 37 markets now around the world. But I'll use this example of a behavior change program. It's not the only one. There are dozens around the world, as all of you know. We have experience with Vitality because, you know, we developed it, but I'd like to show you how this program plays at different points in this value chain and how it brings technology to bear on the performance of health insurance. Next slide. Let me start at the front of the value chain where we're looking to attract and select and price appropriately. When you have a well-designed and well-incentivized wellness program, our experience, as I say, for nearly 30 years is if that program is known to potential customers on its own, it attracts a better risk customer. The brand becomes associated with youth, with healthy lifestyles, with wellness, with exercise. And on average, those brand associations do appeal to younger and or healthier members. But in addition, and we have great experience now, building machine learning models that can identify what kind of client characteristics will lead to a better risk client. And if those models operate in real time, if, for example, on insurance portals or on the insurer's own website, you can, within less than a second, identify that the inquiry is from a good risk customer and then offer them a very attractive price, you can win differentially against competitors, the better risk business, and still be very profitable. We've done this. I think our best example of this is in the UK. This will be hopefully rolled out in the AIA system in the months and years to come. It's a very powerful application of modern machine learning to an ancient problem of life and health insurance, which is pricing. And as Yuan Siong said, historically, pricing is static. It's done once at the beginning, and it's based on a very static set of risk factors, whereas AI and machine learning here lets us take all kinds of new factors into account and to continue improving the algorithm. Next slide, please. I think we can skip this slide. It's just more detail on the same pricing point. I now want to spend a bit of time on how a behavior change program like Vitality can impact on the actual wellness-seeking behavior of individual policyholders. This is just a very simplistic view of the program. One of the things the Vitality program does is focus very intensively on physical activity. It does this by providing very low cost or free access to wearable devices, and of course to gyms for those who prefer to attend a gym. And by rewarding physical activity, we find that firstly, we can convert historic non-exercises into exercises and sustain that. Secondly, we find that even people who've historically been fit and active tend to increase their engagement with exercise over time. And then remarkably, we have also discovered over many years that increasing physical fitness and engagement with physical activity is a gateway to the whole world of a healthier lifestyle. So people who become fit through physical activity start eating better. They start focusing more on their mental health and their sleep. So just like I was told as a youngster that marijuana was a gateway drug to much more dangerous drugs, physical activity is a gateway activity to a broad and comprehensive, healthier lifestyle. Next slide, please. I wanted to share with you a little bit of data. Again, this comes from South Africa, but it shows you a number of data points that show the correlation between the incidence of chronic disease, looking at the top panel, and vitality engagement. So the far left, those gray bars are in the health insurance book, non-vitality members. And on the far right of those top panels are the most engaged vitality members. And you can see a linear relationship across three major sets of chronic conditions between the incidence of those conditions and vitality engagement. Now, by the way, this is not a selection effect. We've tested for 25 years with academic partners. This holds true for cohorts, pre and post joining Vitality and once they're inside the system. And you can see up to 50% reduction in the incidence of those diseases. And if you look lower down, let me focus you just on the bottom right-hand panel. Again, correlation between engagement with the program and total healthcare cost. So the most engaged Vitality members in South Africa have average claims costs that are 14% lower than non-Vitality members. And, that is enormous in health insurance, as all of you know. Next slide. We were very surprised by this data. This data again comes from South Africa, where very sadly, we've had an enormous COVID-19 pandemic effect. Hundreds of thousands of cases. And in fact, the current estimate of excess deaths is north of 300,000, which is 0.5% of the population, even more severe than the US, which I read today at 1 million deaths is 0.3% of the US population. This is data from several 100,000 COVID cases in the Discovery and Vitality database, our own members. And we looked at those with and without Vitality. And this tells you a very powerful story about the protective effect of physical activity on health risk. So if you look at the left here, we have a 45-year-old male who does not engage with Vitality and is not physically active. And if that person's risk of dying from COVID is indexed to 1, now take a look at the middle panel and you see what happens in a 65-year-old male relative to that risk of 1. So a 65-year-old male who's not exercising has a 1.6 times higher risk of dying without any chronic conditions. But once that man has got, let's say, high blood pressure and diabetes, his risk of dying from COVID went up 2.5-fold relative to a 45-year-old. So 20 years of age, 250% increased risk of dying. But now take a look at those in our data who exercise. And this exercise, by the way, is 3 sessions a week of 30 minutes moderate exercise or more. Not, but not necessarily anything more severe than that. Now, a 65-year-old male with no chronic conditions has a lower risk of dying from COVID than a 45-year-old male who doesn't exercise. This blew us away. And a 65-year-old male, even with high blood pressure, has the same risk as a 45-year-old, and you see the same story with 2 chronic conditions. So this is a profound message to all of us about how life-saving physical activity is in the context of this massive global pandemic. Next slide. Another application of data to making clients healthier is trying to predict and then prevent and manage chronic disease. And this is an example of an algorithm, again, developed in South Africa, but applied globally now, where we use data from health insurance claims and Vitality to predict the group of people who are healthy today. Just look at that little green block with red dots around it on the left. That Sankey chart shows that a proportion of those people 3 years from now are likely to be pre-diabetic or diabetic. You can follow the green and see that some of them end up in yellow on the right or in red. And if you go to the next slide, once we identify these people, which we do on a daily basis, next slide, we enroll them in a condition management program, which is integrated across Vitality, but also their health insurance benefits. And so now a member gets a message and their physician, their treating doctor gets a message, which is this member should be enrolled in the program. We then reward the member for visiting the doctor, for getting regular blood tests, for having their blood pressure measured and for having their blood sugar under control. But as I mentioned earlier, we also reward the doctor for having a compliant patient. And the net result of these is much greater improvements in these hard metrics of diabetes outcomes. Next slide. And you can see here, with and without this program, you get we call it diabetes care. You get a 30% increase in diabetics who have the right testing, 14% increase in medicine compliance. So there are material benefits when you link up the patient, her doctor, with a reward system and with the right data. Next slide. We also have taken advantage of technology, particularly during COVID, to provide clients in our different markets with technology, allowing them to access healthcare at home. Of course, virtual consultations that many of you will be aware of. Also, the Tighter Care device, which allows a parent, for example, to take readings of temperature, images of the inner ear of a child or the throat, share it with the treating doctor, and this is another example of technology that can dramatically enhance the efficiency of the healthcare system. Next slide. Moving on to providers. Next slide, please. Again, here data can be used, and this is data that illustrates the relative efficiency of different kinds of doctors. So if I just use the example on the left, each of those blue dots is a admitting doctor working in a hospital, and the vertical line represents the most efficient, the average, where we're looking at the length of stay of patients of those doctors in hospital. The horizontal gray line represents the average of the admission rate in a risk-adjusted population. So blue dots to the right of the vertical gray line and to the above the horizontal gray line, that top right block are the least efficient doctors when it comes to usage of hospital beds and hospital days. And the bottom left are the most efficient. And you can see that data like this immediately allows you to construct efficient networks, but then to use a behavior change program to reward the doctors who are coming out in the bottom left block. Next slide. We also have digital tools that link up the doctor and the patient with the virtual care platform, the health coaches and the patient through a coaching platform, and then, of course, the doctor and the insurer with our own electronic medical record platform. And the ability of these four quadrants to talk to each other is critical. One of the reasons I believe that many health insurance systems continue to perform poorly, and the US is a great example, despite being a $3 trillion industry and having some of the most sophisticated tech in the world, it is highly fragmented. The tech is not interoperable, systems do not talk to each other, data cannot be transported, and integration is a key takeaway, I hope, for you all from this talk, the ability of these digital systems to talk to each other. Next slide, please. I'm going to skip this one now. Next slide, please. And then finally, retention is critical. All of you in insurance know that given how much you spend to acquire a policy, not losing that policy quickly, particularly a good risk policy, is fundamental. Next slide. And we have developed algorithms, again, that in real time allow us to predict which members are more or less likely to lapse in the next few weeks, then to identify which of those are highest value in terms of their policy performance. And then one can use scarce and expensive resources to proactively reach out to those clients and selectively retain them. Next slide, please. Let me end and give a few minutes for questions, just with sharing a few results with you. Next slide. This is data from UK, where you can see that on the left, the attract and pricing mechanisms mean that the book of business in the UK is significantly better than the average of the insured population, and we believe better than competitors. It also shows in the middle, the increase in physical activity once people join, lower healthcare costs on the right, and on the far right, a 12-month rolling lapse rates, 45% lower for those on the Vitality program than those that are not. So across the value chain, the data speaks the story. These technologies, when properly applied, can change the performance of health insurance and lead to very high performance and the liberation of surplus, which can be shared. Next slide, please. And then a little bit of data from South Africa. You see on the far right, declining loss ratio as a result of all of these interventions. And I think also important, many of you who are operators in health insurance or healthcare will be very focused on your operational costs. And I haven't given specific examples, but we have repeatedly used technology, AI, various algorithms to progressively improve the efficiency of our back-end operations, how we service clients, which agents should be dedicated to which groups of clients. And that has led to a real reduction in the cost to serve clients over time. I think I'm going to stop there, Isabel. I'm right on time, I think, and be very happy to answer any questions. Thank you very much.
Yes, thank you, Johnny, for this enlightening presentation and all these insights. We have indeed already some questions. So the first one would be from Suna Bull from Barclays. How do you mitigate against pricing out those risk types who might need insurance cover the most? For example, there is the correlation of morbidity, low life expectancy with low income education. And therefore, those there are the ones who can at least afford it. So the increasing use of data and machine learning might lead to these types of unintended consequences. What's your experience and how do you see this?
Thanks. I think that's an excellent question, and I completely sympathize with that point. I think that the answer begins with where Yuan Siong made the point that pricing is not static, and so if we believe, and certainly I believe, and I've seen the evidence that having brought on somebody with relatively poor health metrics, which may, for example, be due to low income. If we believe that over time we can modify that risk profile, then we can include that in the price. And therefore we should avoid pricing out people like that, because we can create the ability over time to improve the performance of that individual policy. And that is very much our approach. One very good example of that, by the way, is in critical illness and other products where, one can offer policies to people already ill. For example, having had a previous heart attack or with diabetes, where if they're enrolled in a well-managed disease management program, not to, by the way, but if you bring this health insurance mindset into CI, you can manage the risks of those people and not exclude them from cover either. So I think it's a great question, and I hope that's a positive answer.
Thank you. So the next question is, what is the observed impact on spinal injuries due to the exercise accidents?
Well, I don't have data to answer that, but maybe let me talk both as a doctor myself and as somebody who's been a lifelong exerciser. I think that, very few people might have accidents as a result of exercise, but the vast majority of ordinary people, especially as you get older, will develop spinal conditions, and exercise is probably the best way to prevent those. So across a large population, I would be very confident to say physical activity will have an overwhelmingly positive effect on spinal health. And the incidence of injuries must be extremely low, really extremely low. You probably have more risk of spinal injury from driving your car than almost any, than physical activity.
Good. Next question is, any specific examples on intuitiveness and responsiveness towards required medical care using the Vitality program?
Yes, I mean, I think it's, again, a good question. And, you know, the basic behavioral sort of assumption, you know, that I think we've learned through behavioral psychology and economics only in the last 10 or 15 years is that the human brain has a tendency to overvalue immediate rewards and to discount future risks. The technical term for this is hyperbolic discounting. So, you know, none of us believe that we're going to have the heart attack in 15 years' time, but equally, none of us find it easy to resist something very appealing to eat on the table in front of us. So we like what we can get today, and we somehow fool ourselves that the consequences won't really happen to us, or if they do, it's so far away that it doesn't matter today. The point about these behavior change programs is that they bring the reward into the present. They bring that reward of good behavior, instead of your reward only being in 15 years' time when you live a healthy life from 75 to 90. If you're a 60-year-old today, you bring the reward to the present by saying, I will give you cheaper airline tickets, free access to the gym, free movies, a free coffee once a week if you hit your goals, a free Apple Watch. And the human brain responds very well to those rewards, including to medicine compliance and compliance with going to the doctor and so on. So the short answer to your question is yes. A well-designed program does enhance compliance with healthcare management programs.
Good. We have two other questions. One is, what variables do you use in machine learning programs or models of client risk assessment that cannot be considered in traditional models? It's from Louis Wies' Simplex DNA.
Well, I mean, I think the short answer is there are a huge number of variables that are not typically considered. So the typical ones will be gender and age and, you know, previous medical history. And I would never want to discount the power of those. But I'll give you a couple of examples that have been very powerful in our world. One is data from our banking businesses, where firstly credit risk scores and purchasing behavior on a credit card. So what kind of food do people buy? What proportion of their food purchases are healthy versus unhealthy? How quickly do they pay off their credit card? How well do they drive? These things, which are very unusual in a traditional health insurance environment, these elements of data turn out to be very powerful in the algorithms. And I think that the short answer I would say is, if you're wanting to try this, just look at everything, because the whole point about machine learning is these correlations are not often intuitive and not obviously available to our brains, but the machines find them, and lo and behold, you can improve performance with pricing with factors or variables that you never even thought would be relevant.
Good. It's a good point with the nutrition, because from Tim Bishop of OECD, he is asking, do you have studies or do you have shown the relative value of good nutrition versus exercise?
Thanks. Great question, Tim. We've got that data. I don't have it to hand to give you the absolute relativities, but I will tell you this from our data. Nutrition is very, very powerful effect on health, but physical activity is more powerful. You know, if I can somehow get your email address, I could send you the data we have. They're both powerful. Physical exercise more so, but nutrition is a pretty close second.
Another question popped up. How does the program take care of correctional methods required towards improving behavior and healthy habits?
I'm not sure what the questioner means by correctional methods. I wonder if we could try and clarify that. I'm not sure what that means.
Good. Then maybe if we go first to another one. It's Anoop Derabail from IBM. What is the retention rate of people that subscribe to Vitality? So, for example, over say 4 or 5 years in, people that are 5 years in, is there an initial euphoria with this, with the drop-off of the program, then later on, or what is the retention rate?
Yeah, thanks. Look, the absolute retention rates will be different across geographies and across products. So even within the UK or an Asian jurisdiction, you'll see different retention rates across a product set, life, health, etc. What we do know is within every product family, in every country where we've seen this, there's a very clear straight line relationship between engagement with the program and retention. And you'll recall some data on the last slide I showed that in the UK, retention in our health book was 50% lower for the most engaged Vitality members than for unengaged. So I think what the question is alluding to is if people are excited at the beginning and then they fail to engage with Vitality at all, which does happen, by the way, then those people's lapse rates will be the same as the average for that population. But as people start to engage and as they become more engaged, the lapse rate drops in a sort of dose response fashion, as the pharmaceutical industry would call it. The more engagement, the lower the lapse rate. And that again becomes a very self-fulfilling prophecy because your healthiest clients stay the longest. And it builds on itself.
Good. For the sake of time, we move on to the next panel. I would say that we do a 1-minute break for all, and then we move to the panel. So thank you again, Johnny, for really this enlightening insights that were given here and the many examples. Thank you.
Thank you. Bye-bye.
So welcome back to our first panel. The next 60 minutes, we will discuss the topic of how do we extend health insurance to more people using digitalization from 3 perspectives of the consumers, health system, and technology. I would like to welcome Bernhard Kotanko, Senior Partner at McKinsey & Company based in Hong Kong. Bernhard works with financial services companies across Asia Pacific and leads large-scale transformational programs and advises senior management teams on topics including operating models, digitizing distribution channels, redesigning customer engagement and experience models, and innovating value proposition, all extremely relevant for shaping the future of healthcare. So to the audience, you can also ask questions using the provided tool. So as again, please write always first your full name and also your company's organization's name. So Bernhard, it is an honor having you today as the moderator of these panels, and the stage is yours.
Thank you very much, Isabella, for this warm introduction. And it's a huge pleasure to be part of a group discussing today. And my special thanks goes to our three distinctive panelists who really bring all perspectives from the US, from Europe, and from Asia into this discussion. A quick scene setting. The health sector and health insurance overall are in a phase of tremendous development and innovation. Of course, COVID has accelerated and transformed this, but it's not just COVID. When we look at non-communicable diseases, when we look at the aging of society, when we look at the financial pressure on health systems, there are many, many lenses that come together, and I look forward to discussing this because we strongly believe that health insurers can play a critical role in making populations healthier and securing a stable financing for our health systems. I'm excited to discuss this with a distinctive group of people. And the exam question we were given is, how can health insurance be extended to more people, specifically using digitalization? And in the spirit of that question, please join me in welcoming first Sirma Boshnakova. Sirma is a member of the board of Allianz CE. She's responsible for Western and Southern Europe. She's responsible for Allianz Direct and also the CEO for Allianz Partners. Sirma, thank you so much for joining us this morning or afternoon. Then we have Patrick Conway. Patrick is the CEO of Optum Care Solutions, which is part of United Health Group. And he leads a portfolio of care continuum businesses, which I think spans a revenue of 20 billion and covers millions and millions of Americans, trying to make them healthier and provide better health outcomes. So thank you, Patrick, for joining us at a very early hour. Thank you for doing this today. And then from Asia, it is a pleasure to welcome my dear former colleague and friend, Axel Baur, who is now the Deputy CEO of Amplify Health, a joint venture of AIA Group and Discovery, which really aims to transform healthcare in Asia and make Asians healthier through technology solutions and innovation. So thank you very much to all three of you for joining. A quick word on the panel and how we'd like to run the next hour. Before we go into more specific questions, I will invite all three of you for ingoing remarks. And really the floor should be yours because we have such an honor to have you. You bring such a wealth of experience, and I would find it almost disrespectful to narrow down your perspectives by asking two specific questions right away. Please limit those comments to 2-3 minutes. We'll see how this triggers immediate questions from the plenary, because I think it's better if we have the plenary asking questions all the way through and not just at the very end. So dear listeners and dear plenary, please join in anytime with questions, and I'll try to direct them for the best fit to Sirma, Axel, and Patrick. After that first round, we'll then go through into the three lenses that Isabella described. First, looking around, what does it mean to provide health insurance for more people? What do we actually need to do there? Then secondly, health insurance is part of a bigger system. It's financing, it's provision. There are many, many stakeholders. So how do we think that this system needs to evolve? And then lastly, we go into the details of digitalization. What do we mean with this? What kind of technologies, what kind of assets, what kind of data, and also what kind of talent do insurers need in order to really be able to play this bigger role in our society? So that's a bit of scene setting. And I suggest we get started. And maybe I can invite Sirma to start. And with all the trends you have been seeing, with all the background you bring, what comes to your mind as you think about the exam question on how we can bring and extend health insurance to bigger populations in our world?
Thank you very much, Bernhard, and thank you very much for being invited to this panel. I feel really privileged and humbled to be a part of this session today. And I hope that we'll make a very useful and joyful panel for all participants today with all the great colleagues that I have today. So I really want to start with a phrase that insurance is great. And I hope that it makes you smile, because I believe that over the last centuries, we have been providing peace of mind to our clients worldwide, and we've done it really great. So our business model has evolved and responding mainly to events as they arise. And if we are very honest to ourselves, actually as an industry, we have historically a bit overclaimed the language of safeguarding and preventing. And truth, what I really believe has been happening is that this is not exactly what we did. And we mainly heard from our customers when they were in a trouble or when they are in a trouble, which made it difficult for them to love us in really. So in these cases, we gave them peace of mind, but we really never helped them to minimize the risks. So the great thing about technology, and I strongly believe in this, is that we can change this. And with the help of technology, we can change this story. And God, don't get me wrong, we'll continue helping people when they're in a trouble. But what I really believe is that we can start really making sure that we even protect people like never before. And we prevent from acute cases and which is happening in the first place. So I just want to ask you just to imagine, you enjoy a smoother end-to-end experience combining physical and virtual care. It will be personalized services to help us in real time, and many health issues would be actually prevented in the long run. So your health will be tracked and checked, that you are not over-treated or under-treated, and in short, you'll feel like in a borderless and seamless world, and more people could be reached than ever before. But there is one condition, and I believe it's very important, and this condition is that the human touch would remain in the heart of everything that we are doing and in the heart of the technologies that we are building. Because I strongly believe that health is very personal and sensitive, and it's also about data, and the most important asset that we have at the end of the day as human beings is our lives. So in this context, I believe that technology is really the enabler. And to achieve this, I strongly believe that we must work together. Private insurers can drive innovations, but cross-collaboration is needed to create this seamless and borderless world, which we believe is very important for our consumers. So if you're not one of our partners, why not? And this is my courage to join us. And this is really about building a safer, healthier, and happier world. A world with less acute diseases, fewer accidents, less pressure on the health system, and timely and targeted diagnosis and treatments. And I feel good about this. So thank you very much.
Sirma, thank you so much for this very inspirational statement, how health insurance can really expand to not only cover the risks, but help prevent and help live happier lives, healthier lives, and also how technology needs to combine with the human touch. Thank you so much. Patrick, if I can turn it to you for your ingoing thoughts. You have a vast range of businesses that really capture the whole health system. How do you think about how health insurance and the health system can expand its role in society?
Yeah, and I'll frame this by way of background. Now at United Health Group, and as you said, range of businesses on the Optum side of our business that will serve about 50 million people this year in different ways. So from that perspective, used to be CEO of a large insurance company in the US, Blue Cross in North Carolina. And then prior to that was chief medical officer and was administrator of Medicare and Medicaid in the US. So just for this question and others, I'll try to weave in those three perspectives. I am a physician still practicing, although very rarely on weekend. I'd say the following. So we do believe that we need universal access to health insurance as opposed to other countries. The United States still hasn't solved that problem, made a large step forward with the Affordable Care Act, but still has variable uninsurance rates, which I think we still need to solve for as a nation. And we're trying to, and our company believes that as well. Then, and this will build on the previous comments, then it's what do you do with that health insurance, which is where I get really excited. One is, I think we need to buy health as opposed to health care and widgets of healthcare delivery. How do we buy health? How do you focus on health and well-being and use the health insurance mechanism to buy health? I like to weave in anecdotes plus data. When I ran Blue Cross in North Carolina, we were spending over 50 million a year on social determinants of health, transportation, food insecurity, prevention of early childhood, adverse events, et cetera. We'll continue to do that at United and Optum. So how do you buy health? That's number one. Number two, that we integrate physical and mental health, which is certainly still a journey in the United States. So I run all of our mental and behavioral health businesses. So the work we're doing right now is how do you have a comprehensive, accessible, evidence-based mental and behavioral health system that prevents disease, allows treatment for everything from depression to substance use disorders to other mental and behavioral health disorders, and really integrates that in a whole person care model centered around the person, the family experiencing it. It's a crisis in the United States, and we're trying to address that crisis. The third I'd call out, which relates to my current businesses and my previous roles, increasingly, how do you do that in the home? So people are telling us they want to be cared for in the home. We're building out a system that this year will treat and care for tens of millions of people for their physical, mental, and social needs in the home. We can do that through telehealth digital. We also have the ability, because of our scale, to get a nurse into any home in the US, essentially in less than 60 minutes, except for some very far areas, i.e. Alaska. But that gives amazing power to see people both virtually and digitally, but also when they need to send a clinician into their home to care for them. And we do that in a risk-based way, where we take risk from the health insurer, full risk, and care for people's physical, mental, and social needs in their home, especially complex individuals. So those are three of the areas I'd call out.
Thank you so much, Patrick. And it's I love the notion of buying health instead of health care, and also this integration of digital and the human touch, which Sirma also mentioned, but then really how you played it out to say you can deliver it at homes. Axel, Asia is at a very different state of development, of course, when we look at health systems, large populations, a lot of underinsurance. Where do you see the big levers?
Let me start with two framing comments, because I do think it's important to take this into consideration when, as I then talk about where I do think private medical insurance can play a significant role. I think the first part is, I mean, just to remind all of us here, we're talking about 4 billion people in Asia that do not have access to healthcare. And it's not only health, to Patrick's point, healthcare to Patrick's point, it's also to health. And all of these needs access. And we also know that all systems from India to Japan to China to Australia are all suffering a financial burden that is unsustainable. So I think the private insurance plays a significant role in actually creating access. And I think for this to work, our ingoing hypothesis is that the proposition portfolio that one needs to develop as a private medical insurer needs to be going far beyond the high net worth individuals or the high middle class. It has to address really a broader range of the population. And obviously there are countries like India where the bottom part of the pyramid is covered, but there are many other parts, the missing middle, that is not covered. Now, obviously, I'm not naive in assuming that one can do this in the old way and create combined ratios that are favorable without changing the model. And I think this is where technology plays an important role in the go forward. And this is where I think Amplify Health is in the future going to play a significant role as partners to our clients and customers. Technology across the entire value chain of insurer, but technology also within the broader ecosystem of healthcare. And I typically avoid the word ecosystem as a biologist, but in this one I will use it. In the broader ecosystem of healthcare, technology will play a fundamental role to actually reduce the overall cost of delivery. The cost of delivery for an insurer when it comes to its value chains, from delivering the right products with the right underwriting, with the right claims, and with the right provider management, but also supporting the infrastructure. And Patrick, you started to talk about this a bit, to really deliver healthcare that goes beyond the offline delivery. And I think through this combination of insurtech and health tech, we will be able to to deliver a much more cost-efficient healthcare, and with that, a much more broader coverage for a large population, which is in dire need to have not only healthcare but also have access to health in the countries from India to Japan, from China to Australia.
Thank you very much, Axel. Clear problem statement: 4 billion people and unsustainable health systems from a financing perspective, and how technology can be a critical enabler. Thank you so much to all three of you for sharing. Again, I would like to invite the plenary, use the Q&A function anytime to ask questions as we go along. And also I invite the panelists. You don't need to wait for my questions. Your comments are way more thoughtful than my questions. So please discuss with each other and build on each other as much as possible. I'll try to keep us going, but you should not feel in any way constrained by my questions. Sirma, if I may come back to you. You talked about a very different approach also, how people should think about insurance. And I'm curious, as you think about the trends on the customer side, when you look at the change that also needs to happen on the customer side, what is needed there? Which segments and needs and preference, how are they evolving, and what would need to happen that also customers are open to allow insurers and providers to play such a role? Because it's one thing that you wanted, it's another thing that the customers really need to be open to it. And how do you see the trend lines there?
Thank you very much. And just a general comment from my side, I really believe that the customers can learn to love us as an insurance industry, just for the experience that we bring, for the memories that we create, and for the benefits that we deliver to them. And health is specific and very clear example of how we can do this. And if I can think about the consumer lens and what is changing and how we are moving, I see it from three perspectives. The first one is the changing consumer behavior, and I want to talk a bit about this, then the evolution of diseases, and then the changes of technology. And I think these are the three important trends that would allow us actually to discuss how we better make our customers love us for the experiences that we create. So, I mean, I would not say something new, but actually it's already fashionable to take care of our health, right? It's socially important, it's fashionable to take care of ourselves. And, you know, COVID even accelerated this when actually many things became impossible in real life, and mental health became very important. The wellness topic became very important. So on one hand, there was the ongoing trend of, you know, being important already to be healthy and be in touch. On the other hand, COVID accelerated the need and the understanding of many people that mental health, wellness, physical health, these are interconnected things, and they're very much important. On the other hand, we all know that during COVID and during pandemics, when many countries were locked down and there were only emergency cases taken care of, many people could not follow their treatments, they could not take the normal path of being kept healthy. So that's why, you know, one of the things that was happening is that, you know, it became obvious that people are now much more adapted to the fact that they can use and they can do much more things in a digital manner. So who could have thought that telehealth is becoming so widely accepted? Who could have thought that there are many digital things that people are adopting? And this is something very important that, and this is something important. The other thing is people want a smoother experience. And this is something also a current trend that we see. They want to feel like in a seamless and borderless world. And if they go to different doctors, they want to make sure that the data is used according to the data protection, but also they don't need to struggle from bringing the files from here and there. So they want 24/7 companion. They want accessibility to the treatment, and it's a combination between technology and human touch. And I'm a strong believer that the doctors would continue to play a very important role in the whole health journey. Nevertheless, what we need to ensure to them is the simplest and borderless journey, the migration of data in a simple way. And just one of the examples that this is possible is that nobody believed that actually the COVID certificate or the green certificate across Europe can happen. But you see what? It's already a fact, and it's a real example of that things are happening.
That's actually a great example. Yeah.
Yes, and I really believe that technology is enabler. Technology is enabler that would make sure that people are keeping track on what is happening, but also having the opportunity to have access to high quality treatment at the moment that it's needed. So this is the first trend, and I think it's very important. The second trend is, and I was really quite surprised when I was looking at the different statistics, is that actually the disease burden has shifted over the past decade. And while around the turn of the last century, only 6% of deaths were due to chronic diseases, today it's 2/3 already. So that's why I strongly believe, and we'll be talking for quite a long time, that we need to take care of this and etc. But what I really believe, and I'm not a doctor, I'm an economist, that actually data and the joint efforts in terms of prevention would allow us to go to a healthier population, to make sure that we help people with the help of data we are using not only in the health ecosystem, but outside, to make sure that we support our clients to have a healthier lifestyle, to prevent or to minimize the risk of acute situations, and etc. So for me, this is the other topic that we need to work very well, and here data and technology and joint efforts is of crucial area. And definitely technology is important. Recently we were discussing, for example, that there are already technologies that can hypothetically predict the possibility to have a heart attack. And imagine for a second, if we together connect this technology with the customer call center of the insurance company, and this immediately triggers a call of the ambulances, how many lives we could save. And there are much more examples about this. So that's why I really believe that, the cooperation and, there is a real now shift, and there is a real revolution that is we're on the edge, and we just need to work together. And requirements are simple for me. We should not be overcomplicated. Easy journey for our clients based on outcomes, smooth and borderless and seamless, and where technology, human touch, and data are combined together to provide the best outcomes.
Wonderful. Thank you, Sirma. It is indeed a shocking picture when we look at the rise of chronic diseases. And maybe, Patrick, that links to what you earlier said in terms of buying health and not health care. And of course, a lot of the businesses you're responsible for are trying to do this already. How do you see that play out in terms of integrating the pieces? It was also one question that came just now from the plenary in terms of how can we imagine a managed care solution and an integrated care continuum that really delivers that buying health and delivering health and not just healthcare. And Sirma mentioned it, the seamless borderless journey, where you don't need to fill in the forms all the time and where the data is shared between doctors. How do you see this play out? And is this something where you feel that such a care continuum is actually really on the path towards that vision?
Yeah. So let me give at least a couple examples. So one from my current role at Optum. So what Optum does in its core is we serve United Healthcare and other payers across the U.S. United Healthcare is the biggest payer, but we actually in the U.S. But we serve 9 out of 10 payers in the U.S. in some way. And then we try to take risk for whole populations of patients, both through clinics and in the home and community combination of resources. And so we'll take a % of premium. We guarantee the total cost of care, the quality and outcome results, and the experience results. And what we've seen by putting a set of solutions together, clinicians in the clinic and in the home, virtual digital solutions, specialty care management solutions from diabetes to renal to, name your specialty, mental and behavioral, which we talked about. We can lower total cost of care by about 20%. Quality experience, we have star ratings here, 4.5 to 5 star ratings, which are high. NPS results, 80s and 90s, because people like care that surrounds them in their home. Tangible example, 91-year-old woman I met in her home the other day, hugged the physician as she came into her home, 10 chronic conditions, said, I used to get hospitalized 7 times a year. This year I got hospitalized 0. This has changed my life. That also saves it's better outcomes, and it saves a lot of money in the system. So that's from Optum. When I was on the public payer at Medicare and Medicaid, and then at Blue Cross North Carolina in the private system, what we tried to do is use our payment levers to enable this kind of system. So same idea, but we went out to our contracted network, our technology companies, others, and said, how are we going to build and pay for an ecosystem that supports health, from social determinants of health to mental and behavioral to, contracts where we wouldn't write fee-for-service contracts. We literally said, we're just not what we're going to do. All of our contracts are going to be about caring for populations of patients. So those, I think those themes or principles are applicable across settings and markets, at least to a large degree. Even in every market and country's dynamics are going to differ. But I think the themes of how do you buy health and how do you pay for and try to build an integrated health system, I think are going to be common across systems.
Thank you, Patrick. If I can just add a quick question for clarification, because it was coming also from the plenary. I think Ashish Jaharia asked the question, and I think you answered already on the 20% benefit in terms of costs combined with very positive NPS. And is that applicable for very broad populations? Because I'll hand it over to Axel in a second to discuss about how we can build something like this in Asia, where of course the system is far, far, far less advanced still. But is that in the US viable for large part of the populations or whole populations?
Yes, but let me clarify. We get the most cost savings in Medicare Advantage and duals, so sicker, older, or disabled people. The cost saving numbers in a commercial population are going to be lower just because your cost trajectory and your sort of burden of illness in that population is lower. Does that make sense?
Yeah, very good. Thank you, Patrick. Axel, I'd love to build on the 4 billion number you mentioned, because when we talk about the customer lens and this huge number, how do you think education needs to happen and awareness building, and who is actually on the hook for this, to do this, and how can different parts of the system come together to really create the seed and the foundation so that those 4 billion people really understand the needs for health and then begin to evolve on the journey that Sirma described and Patrick described?
It's a great question, and I'll also bring 2 numbers into play. I mean, Sirma, you talked about the increase in death through chronic diseases. I'll also just remind the plenary that in reality, 20% of our insured population is causing 80% of the cost of an insurer. So it is not just about thinking through what we do for and activate and change the behavior of the healthy. It's really about how do we avoid progression and the increasing severity of the diseases of those who have the onset of a disease. I think the second point I would make, and it's very related, and I'll come to that in a second, is if we look into the West compared to the East or Asia, we're talking massive differences in the average age of the population. Yeah, if you go to Europe, we're talking mid-40s, and if you go to Vietnam or Thailand, we're talking late 20s. So what does this mean? And I think this means that we actually have a 10 to 20 year advantage of actually ensuring that the population in Asia actually really stays healthy and avoids the onset of a disease. And I think this is where technology, but more importantly, data and analytics play a fundamental role in actually shaping the behavior of individuals. Behavioral, social and economic, medical and claims data all together give a vast opportunity for us to actually predict not only onset of a disease, but also progression of a disease. And if you then go back to the average age of Vietnam being like 28, 29, how do we use this data in really thinking through how do we not just activate the change behavior of those who are anyway prone to be willing. I mean, you, Bernhard, you run every morning. We don't need to take care of you so much, yeah? We need to take care of those who really have a very different lifestyle. And we need to identify this early, and we need to, and that's the most important point in healthcare. How do we activate the change of the behavior of individuals? We can all talk about, oh, we've identified the diabetic, we have identified the COPD patient, but the whole point, the whole problem in healthcare is really around changing behavior. And this is where I think we as health insurers, I'm coming back to your point, Sirma, can be loved, or the tools that we as Amplify Health, through what also Discovery is bringing to the table, can really change the way people, the population behaves. And I think this is, for me, it's still unsolved. And I don't think that we have, as we call it, the silver bullet for all of this. But over the next 10 years here in Asia, we really need to craft the solutions to avoid, and I'm sorry to say, Patrick, what we're seeing in the US. Yeah, we have a very bimodal population. We have the ultra healthy, we have the ultra sick. We need to avoid this bimodal. We need to skew the bell curve to the healthier. And this is where we, as Amplify Health, we as private health insurers have to work with the governments to really change and create the way population behaves and create incentives for this. And I think, again, doing a little bit of a promo, we as Amplify Health believe that we have the tools in place to at least solve 80%. We haven't solved everything, but I think we can solve quite a bit in order to get this right, especially as we want to avoid the onset.
Thank you, Axel. And if I may just say, it is fascinating to listen to all three of you, because having been advising insurance companies for more than 20 years, it is just inspiring to hear that vision. And it's a vision that goes far beyond just the payment of claims. And that is, I think, the big headline I took away from the first half of this panel. When we now think about the how do we get there? And we come to technology in a minute, but before that, I'd love to talk a little bit about the systemic parts of it, because interestingly, all three of you describe that it must be the combination of public and private. It must be the combination of financing and provision. So you completely cut across industry boundaries, and you cut also across very different incentive systems. When I think of a private company that needs to generate profits versus a public health system that has very different incentive logics. And I'd love to understand a little bit how you see this systemic aspect. How does this need to come together, and also where maybe do private health insurers need to change in order to become more integrated parts of that system, rather than optimizing the niche of, let's say, private payments. Maybe I start with you, Patrick, also because there was a question from the plenary, which I'm grateful I don't have to answer, which is, what are the top reasons that, especially in the US, where this is actually quite far advanced, when it comes to data sharing and systems interoperability between the insurers and the different providers, it's still not working. And maybe you can quickly comment on that specific question, but then the broader aspect of how do we need to think as a system?
Yes, so a couple of thoughts. First on that one, I'd say the policy changes that the public sector did, electronified, if you will, via EHRs and other things, health data. So that was a positive. They didn't fully do the pull through to true interoperability, which actually we are trying in the public and private sector in the US to do now. So how does data actually flow from public payers to private payers, from public and private payers to providers, et cetera? That is still a work in progress. It is also a public-private solution to build on that theme, like many things are. But I think it's a fair point. The ACA was supposed to drive more interoperability than it did, and now it's how do you use regulatory and private sector levers to sort of pull through the rest of the way, which would unlock a lot of value. I hope people love insurance companies too. I'm not sure they do in the US. I'm pretty sure they don't. The average NPS for an insurance company in the US is not good. here's a couple thoughts, which we'll get to United Health Group, which, look, it's why I'm here, and I think it is applicable to other settings. We have built both a health insurance and a data technology company and a pharmacy benefit manager, a pharmacy company and pharmacy service company, and Optum Health, or I lead a bunch of the businesses in Optum Health, which is a care delivery organization. That allows you to unlock a ton of value in the system, because you're no longer just, and I'm not saying it's 100% replicable, but I think some of the parts are, because you're now both the provider and financer of care and the delivery of care and the pharmacy, and by the way, the data technology backbone underneath it. And then we do that with other payers, and get to love your payer. People generally like their providers of care. So we have a ton of payers in the US right now that we put on their shirts, Blue Cross Michigan or whatever the payer is. And now that patient, that consumer, they start to love Blue Cross Michigan or, you know, whatever the payer is, because like they actually start associating their payer with their physicians, with their clinicians, with the provision of care, which generally people have much more positive views of. By the way, rightly or wrongly, some of those physicians are pretty low quality, but people still love them. So how do you have a high quality system that really integrates the payer and the provider? I think that is also a theme that, my hypothesis is applicable across settings.
Just tried to visualize when when providers, when physicians soon wear Allianz T-shirts or other T-shirts. It is a fascinating vision that, of course, part of the experience. In order to love your insurer, you also need to, Sirma, you mentioned it, the seamless experience, and you need to combine the payment and the fulfillment in an emotional way.
Well, just one data point I should have shared before and I didn't. We now employ or have another partnership relationship with over 90,000 clinicians in the US, over 70,000 physicians. It's heading towards 10% of the total market. We're the largest employer of clinicians in the US by far. So it just, that integration at scale, it starts to look and feel differently. So anyway, we just share that stat, hopefully helpful.
Yeah. Sirma, if I may come back to you, and I'll not ask when Allianz will begin to expand deeply into the provision of healthcare, though I'd be curious, and feel free to comment. But I'd also love to understand, Allianz is a very broad insurance group. It's probably the broadest insurance company, where you do all lines of business. You're worldwide present. You're, of course, in many of these, the largest global player. When you think of interoperability between the health side, but then also other parts of Allianz, how could, because we have many here among our hundreds of participants in today's calls, many come from insurance companies that have different lines of business. And I think one part we touched is the financing and the provision, but the other part is also how can you connect the dots within such large insurance groups? So I'd love to, how you experience this in Allianz, and maybe you also can comment on how you think as an insurance company around investing in provision.
Great. So it's a great question. And first of all, just one comment from my side on when Bernhard, you said that the private insurance companies are mostly thinking, I'm a bit now exaggerating, how to optimize the result and how to make it better. And what I really believe is that, and especially in here, but in all other areas, all private insurance and all insurance companies are very much interested also in changing the consumer behavior and putting much more focus on prevention and minimizing risk. Because at the end of the day, it's a win-win situation for all stakeholders. And I'm a big believer that prevention is one of the areas that would allow insurance companies also to deliver better value to their shareholders. So just a comment from my side. So in terms of Allianz, for sure, and I strongly believe that actually this is one of the great, and Allianz has many great advantages, but being so deep, so diversified is really one of the greatest advantages for our clients. And let me just give you an example, and this is my passion in the past couple of years, is to connect the dots. And this is about building one-stop shop for our clients. Because I strongly believe that actually what we can provide as a group together with different partners also is, just a hassle-free journey. And just let me give you an example from a different area, but there is a lot of health elements. Last year, we launched our travel ecosystem, and it's about creating a seamless journey through the whole value chain, starting from inspiration and ending when you're at home. So actually, you can put all your documents in one place, you can get inspiration for the travel, you have a smart, cancellation in terms if your flight is canceled, you have automatic refund or you're rebooked somewhere else, and etc. You can have even telehealth. You can even meet with a doctor in the virtual world if you have problems when you travel. So my point giving this example is that when you're working in such a diversified group, yes, definitely it's a bit of a challenge to connect the dots, but this is the greatest benefit that we can bring to our cluster. One-stop shop that is providing peace of mind on 24/7 basis. And this is something that excites me on a daily basis to build.
Yeah, thank you. Thank you. Axel, when we think about the one-stop shop and when we think about the interoperability of systems that Patrick also described, how do you think insurers and also providers need to connect differently between public and private? Because when we look at data in Asia specifically, but also globally, of course, the largest parts of the population are covered through forms of public system with all the constraints there and all the challenges. What changes do you see? And also what kind of solutions would be required to connect the public and the private world better?
Interesting question. And let me, before I get to this, if I may, respond to the plenary question around interoperability, because I think this is not only an issue that I think, Patrick, you highlighted from the US. I would argue that in no matter what system you go, you actually find the interoperability question. You can go to the UK, you can go to Germany, you can go to Singapore, you have it everywhere. And I think it has two important enablers. And Patrick, you touched upon one, and this is all about really the regulatory framework that needs to be set. I would actually add one element that may have been lost in when Johnny talked in the plenary, and this is about shared value. I think it will not work at all if we don't start really creating triple wins for the payer, the win for the consumer, and the win for the provider. And only if we share the value that we create through an interoperability kind of system, it will basically be used by everyone. And I strongly believe this. In my previous life, I did this with clients in Germany. And really setting the incentives right is one key element to get interoperability done. Yeah. Now, how do we get the public and the private work together? I think this is the $6 billion question that I think is probably not solved anywhere in the world really well. And I would argue, Patrick, as much as you claim to do this well in Optum, there are still a lot of areas where you can improve. And I would argue the same is true for a Ping An in China or an Allianz in Germany. And again, I think this is a journey. I think the most important part that I would argue here is that we need to take away the transactional nature of anything that private is doing. And if you think about what public wants, and I lived for 4 years in Japan, the public system wants a trust in a private player. And this takes years to build. And I think we need, if we take away the transactional nature of what we're doing, and again, I might sound naive, but I strongly believe if we want to keep equality and access and legibility in a healthcare system for the broader population, it has to be something that is based on shared value and is not based on transaction. And I think if we want to be even more loved, Sirma, we need to bring this across in a genuine way. Because in many parts of the world, and you can go to China, you can go to the Middle East, and probably even to India, too many systems were betrayed by private. And this is indeed something that only if we really build this as a multi-year journey, I think we can start collaborating. I think that's a governing thought that at least I strongly believe in as we build out whatever we're doing here in Asia with Amplify Health. We're not in for a year, we're not in for 3, we're in here for 5, 10 years. I think the second thing, and this is where I indeed believe we can even strengthen the love of the private insurance and obviously other constituents. The private side can close the skill gap that is present across every healthcare system here in Asia. And I think if we really bring the skills, the capabilities, and the technology into those systems, I think we will be able to deliver this long-term partnership that I'm propagating. And then I think we have the foundation. I don't think that it is much more complicated, but this is where people are looking for this. We have the solutions to connect private and public. We have the solutions to build an ecosystem. Patrick has shown this in the US. Sirma is showing this in the Allianz case examples that he shared. I think we all know this. We have the toolkit, and with the skill advantage that we have, I think it's going to be hopefully not easy and not a walk in the park, but it is something that is solvable through private. And I am seeing in many of the conversations that we as Amplify Health are doing across the countries that we're active, is to actually see the open doors that are there, but they want to see the genuine belief in, or they want to see that we're genuine about this and not just short term.
If I can add a bit on this, and I'm a bit more positive about the fact that private insurance also bring value, but not only because I'm working, but also because I have seen many real life examples. I really believe that actually, there is a space for partnership, and I'm not trying to be naive, but we see it in everyday life, and I strongly believe that private insurance companies also can, they're much more open at this point of time for many reasons, for more innovative treatments, for making sure that technology is coming in place. And this is also what we see, if we think about Allianz Partners, that is, by the way, connected to approximately 1 million providers. We see how powerful it is when a private company that has dedicated some investment budget for new technology, for investing in startups, for making sure that this is going through the whole value chain, can actually reduce also the hurdle from the public health system. And I really believe we need to talk also about this and further not only talk, but also act together. We are not yet that united in terms of making sure that we bring the benefits to the health system and we actually take out the burden that is now rising. So maybe my encourage to all of us is to start with us and to start working in a much more coordinated way. And this would also allow us to bring much more benefits to the public sector.
Yeah, I have to add one thing, because you reminded me of one thing that I think is super important, Sirma, and that is, I think the private health insurers should live up to their ability to shape. Many of the public systems are looking into the system and looking for people who help them shape the environment. And I think especially if the private health insurers come together, especially here in Asia, the cake is so big, so thick, that even a moderate slice satisfies everyone. and is of value to them. And I think shaping the healthcare system as private health insurer is something that we should all aspire to be doing, not only in the US, not only in Europe, but most importantly here in Asia.
Wonderful.
So I think,
thank you.
Sorry, I'm going to jump on it. We're ending in positive notes, which is good. I couldn't agree more on sort of the opportunity and the public-private partnership and what we could do together. And I've seen it work too, both in the private market and public, we work together. To build on Axel's last comment, I think that's 100% right. You know, it's not just in the commercial markets in the US. It's, you know, Medicaid is now 75+% privately managed. You know, Medicare Advantage will be 50+. I think I've been in the public sector. I've, you know, sat administering Medicare and Medicaid. You look to the private market on how you're going to shape and buy health to bring it back, and how are we going to shift the health system and the curves of people. We haven't talked about lifelong trajectories. How do you shift a lifelong trajectory over time for, you know, hundreds of millions or billions of people? And what does that look like? And what's private health insurance's role in doing that, which I think is incredibly huge.
Thank you to all three of you for really sharing a wonderful vision of shared value and an interoperable system between public and private and financing and delivery. You all mentioned technology as an enabler, and in my very last round of quick questions, and I ask you to be quite short and sharp as we only have about 5 minutes. You all mentioned technology as an enabler. You mentioned data and analytics as enablers. If you think of, let's say, your wish list on which innovations, which assets, which technology tools, which data would be most critical, what would be on that wish list? Maybe we can go quite quickly. And I see Biswa Misra joining the Group Chief Technology Officer of AIA. So just imagine it's your wish list to the technology side. What would that be to create that vision that you have all so beautifully laid out? Maybe Axel, let's go first with you.
Yeah, wonderful. Look, I think I'm going to repeat one thing that I said at the beginning, and then I'll just talk about one other thing. I think really data is key, and I think being able to tap into the social, economic, behavioral claims and medical data in a way that allows you to do everything that we talked about when it comes to analytics, to predictive modeling, to basically keep people healthy, I think is one part of the wish list. And potentially over time adding multinomics to this so that we have additional markers. I think the second big wish list is, I think we all understand that many of our clients, if I take an Amplify Health angle, are working on existing legacy systems. I think creating the sizzle, creating this customer interface service layer that allows for state-of-the-art point solutions to be applicable on a technology legacy system is probably the most important part that I would see. Maybe I'm not visionary in my ending points. I'm potentially very, very much short-term oriented, but long-term, I think we just need to be clear that technology is going to drive whatever we're doing in healthcare. We've heard this over the last hour, that it's the biggest enabler to keep the populations healthy. So my dream is, maybe, and that's the last one, more to the entire population, is that people stay really open for innovation, because this is going to keep everyone healthy for long and will make lives livable.
Thank you. Thank you, Axel. Patrick, what would you add to that wish list?
Yeah, I'll just paint a very brief vision that Mrs. Jones, or whatever person, we can track her over place and time, anticipate and meet her physical, mental, social, and spiritual needs, so she has a better life.
And the technology to do that.
Yes, the technology, the data, the interoperability. Yeah. So there's lots of specifics underneath that, but I think that's the vision of where we want to go.
Okay. Wonderful. And Sirma, that connects very beautifully to the journey you laid out. In order to deliver that, any specific asks? You said this is the technology we need, whether it's artificial intelligence, whether it's advanced analytics, DNA screening, whatever it is that would need to be more part of this in order to make it work.
Well, I strongly believe that technology is the enabler, and everything that we do in this area should be really based on the outcome that we expect for the benefit of our clients, to keep them healthier and better. And I'll continue repeating that technology should be built with the heart, with the human touch. This would allow us to build a seamless and borderless world. And definitely faster, quicker, cheaper, and whatever you want it. But this is based on, should bring the benefits to our end customer.
Wonderful.
Thank you.
Thank you so much, Sirma. Thank you, Axel. Thank you, Patrick. I think we are right on time. It's been, I thought, a very rich discussion. Thank you for your openness. I took down 4 big headlines, and that would be my closing comments. It's about shaping health and not just healthcare. It's about creating a shared value that really has a united trust between public-private, between financing and provision. It is an interoperable system that works for everyone. And finally, it has technology as an enabler, but with a human touch. With that, a huge thank you to all of you. Thank you to the audience for the questions. And I'll hand it back to you, Isabel.
Thank you.
Thank you. Yes, thank you. Thank you very much for this vivid discussion with many lessons learned. And I would like to thank Bernhard and all the panel members for these really very great insights. We will now have another short break of 4 minutes, and then we start again with the second panel.
Thank you.
So welcome back to panel 2. We have heard it before, so AI-driven innovation needs data. However, this also bringing up questions about the responsible use of data in insurance. In the next 60 minutes, we will discuss how insurance can strike the right balance between innovation and the responsible use of data. And we will look at opportunities, things to watch out for, and the way ahead. The panel is moderated by Biswa Misra. He is Group Chief Technology Officer and member of the executive team of AIA. Biswa is responsible for providing leadership in technology, digital analytics, and shared services across the whole AIA group. Welcome, Biswa, and the stage is yours.
Thank you, Isabel. Good evening, good afternoon, and good morning from wherever you are listening in today. My name is Biswa, and I'm the Group CTO for AIA Group, calling in today from Hong Kong. I'm honored to host a panel for the Geneva Association on the topic, using data responsibly for innovation. How can insurers strike the right balance? Joining me today on the panel are Professor Miriam, who is a professor at the Nottingham University Business School in UK and Aviva Chair in Risk and Insurance. She is renowned international expert in intersection of banking, risk, financial technologies, insurtech, editor of leading scientific journals, and a regular consultant for the United Nations Industrial Development Organization. Her research includes, amongst others, inclusive insurance, financial well-being, and preconditions. Welcome, Professor. My second panelist is Girish Naik. He is the Chief of Customer Service, Operations, and Technology at ICICI Lombard, largest private non-life insurer in India. Girish ensures that ICICI Lombard is at the forefront of using new technologies to acquiring, retaining, and servicing their customers continuously better by implementing their customer-centric digital strategy. My third panelist, Chowki, he's the head of AI governance and thought leadership at AXA Group. He leads and manages the responsible AI governance framework at the group level for managing AI risks and accelerating AI adoption in core business activities. Works with international regulatory organizations on responsible AI development. My last panelist, Adrian, he's the general manager and head of strategy at Zhonggan Group. Zhonggan is a digital native and online-only insurer where Adrian is responsible for the company's strategy, value proposition, product market fit, strategic partnerships, and joint ventures. He's a founding member of Ziet Tech, the technology venture founded by Zhonggan Online. Without further ado, let's get started. As you can see, we've got a panel here which is quite diverse. We've got a senior member from the Indian insurance industry, somebody who knows the Chinese insurance industry quite well, and somebody from the European insurance industry. So I'll begin by asking Adrian, how do you see your company and the broader markets that you see in Asia using data for key transformation initiatives and the value that you really drive out of the use of data?
Thank you very much, Biswa. It's a pleasure to be here with everyone and sharing the panel with fellow panelists. I think there would be a lot to say, obviously, about how much data has transformed and evolved in the landscape in the China market. I would probably be starting with one key point, which is what we've been actually noticing over the last 10 years in China is the booming digital economy, which has really been transforming the way people would live, consume, travel across the country, work. And all that obviously has been driven by some of the big platforms, which were data and digital native companies. What we've seen at Zhonggan since the very beginning in 2013 was that actually the way insurance is being operated is based on data, right? Insurance is all about selecting risks. It's all about underwriting. But by building a company that was digital native, you could actually really, in a way, redesign the process around the customer, the way you look at risk, the way you look at behavior, the way you look at pricing, and connect that into the life of individuals through their lifestyle, through the way they consume, through e-commerce, through travel, through mobility. And in the end, come up with, I think, a different way to engage, a different way to build products, and a different way to deliver value through a new way and usage of data. And the last 10 years in China have been absolutely astonishing. To many extent beyond China, COVID has been a massive challenge, and at the same time, a massive change agent about how data would create value and would accelerate the transformation of the entire insurance industry. If I look in a way at the way China has evolved, there's been many waves on how, both from a regulatory, from a usage, from a market practice, but also from a consumer adoption, reaction to data. And in many ways, what we are seeing these days about the use of data in insurance by the industry is very much the age of maturity. I think innovation has been absolutely incredible from a lot of the digital native companies like Zhongyan, but also by the existing large-scale insurance companies that really made a massive transformation in the way they were thinking about risk, about data, about consumers, but insureds. And the age of maturity actually means that now I believe the balance has been found between letting players in the markets use data to optimize the way they offer products and services and delight customers, together with ensuring that the awareness, the usage of data, the control of data, the accessibility and changes that end users have the right to do with their own data is also properly safeguarded. And I think these days are very exciting simply because with this balance in place, I think we have a level playing field about how the industry can continue to transform, continue to follow the needs of the industry. And I think I would finish on one keynote. In my view, responsible use of data is all about creating a shared value, sharing value back to the consumers in exchange of how could we optimize the support, the protection, the care that is being provided to them by insurers.
Thank you, Adrian. On that note, maybe I invite Chowki to share a little bit of the European perspective, because you have so much of data, so much of history, so much of customer assets that you hold on yourself. So how have you seen in the last few years the use of data by European insurers to drive innovation and value for the customers that you serve?
Yes, thank you very much. And to go back to your question, Biswa, I mean, in Europe, we have seen since few years an acceleration in digital transition, digital transformation, which is at the top agenda also of regulators. There is a kind of reality of consciousness that we need today to value as much as we can European data sets to make sure we collect also in a fair, in a transparent way, in a private also manner, data, whether it's coming from vehicles, whether it's personal data, whether it's about lifestyle, as mentioned before by Adrien, to make sure we can, propose the best services to our customer. And I believe there is a pace which has been set up right now by regulators, but also with the support of local European insurer and also reinsurers to actively work on the way we can drive this forward. Obviously, we have GDPR, who has had a great impact on how to use responsibly data, focusing on data privacy and governance. And since that, we have seen that there was more and more engagement from local authorities, European authorities, to move also on a European common data space, especially with a focus on transport, health, financial services. Also, some initiative links to open insurance to make sure that we can also share with other sectors, do cross-sector data management, produce, cross-selling, using different distribution channel to reach a different level, in the life of a client, of a customer, to reach them with the right product and also the solution that they need in their daily life to support them. So there is a kind of alignment between what the regulators are trying to do, protecting European citizen fundamental rights, and also accessing, and leveraging very open data that are more and more produced and that sometimes underused. So this is the trend we are currently facing, and we are part of it. At AXA, we try to contribute as much as we can on the emergence of a right framework to ensure the responsible data management. And we also try to work as much as we can with policymakers, with other sectors, to make sure that we can avoid, in the way we collect, we use data, unintended consequences. And also we can definitely protect the right of the customer with proposing new personalized, insurance products, and also leveraging, the availability of data from other sectors. This is maybe the beginning, but I think there is a lot of space, of room to create new products and to leverage this cross-sector interaction within the open space.
Thank you, Chowki. Maybe on that note, I can invite Girish, who heads up India's largest general insurance company, to share a little bit of his experience and the trends that you see in the Indian market.
Thanks, Vishwa. Happy to be here on this panel. Just to give a context of the Indian market, I mean, it's been last few years have been really transformative in terms of the penetration of mobiles and the complete data revolution that's taken place. If you just want to understand, the cost of data today in India is the cheapest probably around the world. We pay less than 10 cents per GB. And consequently, the consumption of data on the mobile is about 1.5 times the world average. It's 18 GB per month instead of a world average of 12 GB. So users are now consuming data. And this happened only in the last 5 to 6 years, right? It's not something that's been, we were a bit behind the rest of the world in terms of the data explosion. But what's also happened is a significant amount of investment the government that has made in terms of getting the Aadhaar, which is the single identification number for every citizen in place, and that's formed the basis of many of the services that the government is rolling out. In fact, 3 years back, it rolled out a health insurance scheme for the absolute bottom segment of population. Almost 25% of the bottom segment of population is covered through that scheme. And that's only possible because it's able to kind of, through the unique identification number, biometric, this is able to provide these services, secondary and tertiary healthcare services to the underprivileged. But I think the single most exciting thing that's really happening is the proliferation of payments and the use of UPI. And this has really transformed the way, and the whole pandemic-related lockdown and restrictions kind of boosted this significantly. So this now almost any shop, any merchant is able to, through a QR code, is able to take payments, and everyone just, I mean, cash is finally seeming to go out of the system. I mean, Indians never tired of using cash, and cash is finally going out of, looks to be going out of system through UPI. And UPI does at last count of 5.5 billion transactions a month through the banking system, and anyone can use it. So, I mean, this has given rise to a lot of, data being generated by all these systems. And there is a lot of work being done on how to use the data and how to also provide further in terms of healthcare services, etc. So in terms of what we have been doing as a company, we have been an early mover in this space. We've been digitizing our operations for a lot of time. We have a lot of data as a result of that. So we have been able to launch, of course, services using AI and ML to help the customers in various, whether it be faster claims processing for health insurance, or in terms of doing inspections remotely for customers. So, but I just want to look at a couple of ways where we have gone back to help either our customers or, so for example, a lot of our in our marine transport business, we've used data that we are collecting from our customers' travel movements to significantly provide value-added services in terms of prevention of hijacks, theft, fuel pilferage, which are very common in the Indian context. And we have been able to use a lot of data and help customers to kind of better their business. And it's a direct customer benefit in terms of lowering the loss ratios. But on the other hand, we also used a lot of data that we have on accidents, and we're working with the government to actually identify spots on highways which are more accident prone. And this is something that, I mean, it comes under no insurance kind of prerogative. It is basically something that we thought makes sense from how to use the data that we have in a manner which can give back to the society. And this is something which it's now become a larger initiative across the industry, where we kind of working with the ministry to figure out where are the accident spots and kind of putting measures to kind of prevent accident. We've seen the initial results of this are positive, where we've been able to reduce the frequency of accidents at certain levels on the highways through, and this is all through use of data that we have collected over the years through our motor business. So I think there are different ways in which we can, I mean, apart from just directly using it to do better underwriting or claim processing, there are other ways in which we can use the data that we have to benefit either the customer or the society at large.
Thank you, Girish. Professor, this is an opportune time for me to invite you in to share your perspectives. Just listening to the guys, I just heard data, data, data. And the people I speak to, they say they have never enough of the data. So when you go back to your think tanks, universities, and the people that you deal with, I mean, is data an evil for you, or is it an asset for you, or maybe somewhere in between? I'll just be interested to hear a perspective which is really academic and maybe future looking and looking after the society at large. I know you're into inclusive insurance also quite a bit. So it'll be a pleasure to hear from you how you think about it.
Thank you very much, Vishwa. It's great to be on the panel today. As we all know, the insurance sector by nature has been intensively data-driven industry for many years. And insurers manage large quantities of customer data, which are critical to understanding and evaluating risk. The development of AI and big data analytics disrupted the industry fundamentally. Big data featured high volume, high velocity, and high variety of information. All these are consistently generated from multiple sources, and indeed, such developments and advancements created new customers, new markets, and new regulatory challenges. So if we focus on inclusive insurance, for example, in the UK, as many as 5 million people are not able to access financial products or services, including insurance, because there isn't enough information on their credit records, according to Experian. These people, so-called credit invisibles, account for a significant portion of the society. They could be young people who have yet had their credit scores, or senior citizens who have limited credit records, or those who have low income, or they could be recent immigrants or expats. So this is where big data and AI can jump in and make a significant contribution. We know that many insurance companies and academics are working in this direction, using, for example, machine learning to train a model based on structured data and unstructured data to assess the default risks for individual customers. And in the morning today, we heard Jonathan Broomberg's excellent keynote speech, which revealed us how credit risk scores, credit card payments on time, could turn out very powerful in algorithms alongside with gender, age, or medical records. So such research could be very helpful in understanding the major risk factors faced by different types of individuals, and therefore designing affordable insurance products for those who are normally neglected on the spectrum of insurance services. In this respect, big data and AI has potential to create useful innovations that can benefit customers, companies, and the wider society. Therefore, it is important for the industry to continue working very closely with academic partners on producing research that targets those who could least afford insurance. And of course, here the data is very important. It's a very valuable asset that we all need for our research purpose. And we need to work very closely with our industry partners for making use of this data to create those models, those innovations that can help for the betterment of the society. Thank you.
Thank you, Professor. I was wanting to go back to Chowki. I mean, hearing all this as a consumer, I feel really scared. You know, there are these many opportunities that you have, and you know so much about me. What if you start to prejudice against me? Or what if you start to discriminate? I'd like to hear your thoughts. Now, you have a lot of data about me. How do you make sure that you use it responsibly and don't penalize me for being a good citizen and sharing a lot of new technologies are trying to get more data about me? So Chowki, I'd like to hear your thoughts, but also to our people who are listening in, if you have a question, you can type it in the Q&A, and if we have time, we'll pick it up as well. Get involved. Chowki, over to you.
Yes, thank you very much. Yeah, it's a tricky question because there is, you know, a lot of debate right now at different national, international, supranational level about how to manage risk linked to the usage of massive data, of big data, and also how to manage the risk linked to the use of algorithmic model in the way performant one, in the way we drive a solution or AI-powered solution. So I think there is a way to tackle this is to set up accordingly the right framework in an insurance company by defining policy guidelines at different levels for some professional families, whether they're underwriter families, pricing families, the risk management families. We have been working at AXA for years on setting up, you know, data governance framework to work on data maturity, data culture, data quality, to make sure that everybody at AXA who is concerned, you know, by the usage of data, which concerns mostly everybody, but when we turn to the customer, it concerns certain population who are focusing on using data scientists, data managers, and so on and so forth. We try to focus on how to train these people to these topics, which are definitely who could harness, you talk about fairness, discrimination, customers. We know that sometimes there is some biases or in the data sets. We need to correct that. There is biases also produced by the model we're using. Mariam, you know, mentioned that before in some way. There is also different kind of biases coming from the data scientist, the one who's basically manipulating not only the data, but also the algorithm and both. So we need to have a kind of safeguards. And at AXA, I'm in charge of managing what is called now the AI governance framework, which has been launched over almost 2 years ago. We try to work closely with our colleagues from data governance to make sure that the usage of data for AI-powered solution in different entities of a group is done correctly with through a lens of data ethics management, but also usage of algorithm, you know, solution is also taking care of this topic of fairness, explainability, robustness, making sure that we reduce the risk as much as we can. And to get back to what's going on in Europe, if I may, there is now a strong push on data governance. There is Data Governance Act who came up like a year ago. There is the AI Act who will be discussed at the European Parliament, focusing on AI risk management, deep diving into what is an high risk AI system with a focus on discrimination and financial exclusion. So underwriting, claims, and pricing are under scrutiny right now by European experts. So we need to focus on how to perform self-assessment, how to train people, how to make sure that we reduce as much and we mitigate, you know, the few risks we have in solution, whether it's about pricing optimization, it's about underwriting, it's about collecting also personal data. So there is, for me, a kind of value chain which has been, we need to be under control with the human in the loop in most of the steps of how we collect, how we use, how we train our models, how these models are performing, these AI models are performing. There is a kind of value chain we need to develop and make sure that we have a human control and human oversight over it. So this is a way to tackle, this topic of fairness or making sure that the customer is at ease when we propose new solutions. We're based on AI, we're based on massive data. But this is, I think, something still to also build with other insurance companies, with a discussion with regulators, but also with other sectors. So we are not alone working on that. And regulation in Europe is catching up on this topic. And we try to have a better approach at AXA by setting up these two good governance that I mentioned, the AI1 and data working closely together.
Thank you, Chowki. Thoughts are very insightful. I'm kind of still wondering in my mind, maybe Adrian and Girish, you can double team and help me unpack a little bit. Chowki talked about how we do this. In your industries, in your companies, how do you strike this balance between innovation and privacy and making sure that you're being fair, just, inclusive? I can go on adding adjectives, but long story short, the balance between innovation and making sure that we are inclusive. Maybe Adrian, you want to go first?
Yeah, very happy to shed some lights on the way we've been thinking about it. And very clearly to us, data and digital are deeply linked by the richness and the depth of data points we can collect about individuals. It is still extremely new for our industry to look at the new pieces of data coming from digital and take that into consideration in the way you consider risk, individuals, and pricing. I think what's the biggest challenge here I see is the concept of having to create, uneven groups and segments in order to price a segment, basically. And on the other end, the power of data that allows you to micro-segment down to the individual. And of course, raising the question about, am I going to be fair if I look at that individual as a risk and price it in a different way than if he was part of this bigger segment? One of the answers that we've realized is actually, as long as you acknowledge that not everyone is equal in terms of risk, actually risks are really down to an individual, right? A micro segment of one person. As long as you're able to actually help that individual pay a fair price, get the right product and support, and helping on his journey about education, about the value of his behavior and his lifestyle, and the impact it has on his risk. And I'm not just talking about motor insurance, it applies to every aspect and products that individuals are impacted on their end. I think as an insurance company, as an industry, we are playing a very fair role to help educate and move forward for the society what it means being the health partner or the insurance partner for individuals. And this is something, Miriam, you mentioned about financial inclusion, inclusiveness. At Jongan, we've done that at scale, right? I don't think we're communicating anymore about the actual number of customers, but we have been consistently insuring more than 500 million individuals in China market, which is more than half of the entire population having access to internet. So when it comes to financial inclusion, the role of usage of data and digital, and basically playing the role of a partner, I think this is probably, yes, so some contribution in my view I could make for today's panel.
Thank you. Adrian, Girish?
I think over a period of time, the amount of data that we've got is phenomenal. And we also started using a lot of external data along with the normal data that insurers typically would collect. I think where we need to kind of keep a watch about how we're using it. And I'll just give you an example from health insurance, right? We talk about pricing health insurance, and we would in normal course, we would collect few health variables, you have the medical test done, and if the person is diabetic, you would kind of price the risk accordingly. So there no one says that it's biased. You just say you're pricing the risk appropriately, and that's you're upfront telling the customer, look, I'm going to collect data on your health and I'm going to give you a price accordingly. But what happens when you kind of extend this and try to do this through an AI model? I mean, you're not only collecting the health data, but you're, say, adding further data you get from the external system, say, social media and other stuff that is there. And then the AI model comes out and uses some other factors in pricing, which you are not aware of. And just for example, it could be that a certain region of the country, you would have people more susceptible to heart disease. This is not something that you normally collect, and you don't normally use region, or region could be a proxy for race or whatever, as a variable in your underwriting. But if you're using the AI to throw that up, then the AI could be well using that, and you would then be biased towards that people coming for business from that particular region. So how do you go about kind of trying to remove those biases in the in your AI? So you need to keep a watch for which are the variables. If region is being a variable, region as a variable is something that gets thrown up in your AI models as a significant variable, you kind of eliminate that and take it, so you kind of remove that kind of bias from the system. The other thing that we kind of try and do is make sure that we also, and Jockey mentioned it, have the human element in the processing as well. So you always kind of use AI in a way that, yes, it works to benefit the customer, but if it's not, then you have a human element coming in. For example, when there is a break in the motor insurance, a person doesn't renew in time, we have a solution where on the mobile he or she can just photograph the vehicle, and there is a AI solution which kind of checks for damages. If there are no damages, then the customer will get insurance right away. But if there is any damage, it could be something which is actual, it could be something which the AI has falsely read as a damage. We do not reject the insurance outright. We kind of allow a human to have a look at it, and rejections are only done by humans. So wherever AI is rejecting, whether it's underwriting call or it's a claims related call, we do it in health claims as well. So where the AI is rejecting, we never allow the AI to reject outright. We always have a human oversee it, and that also helps train the AI solution better as to what should be taken, what should not be taken in normal course.
Thank you, Girish. Professor, I was just wondering, listening through to our fellow panelists and the use of data, the ethical use of data, from the perch that you sit in, I mean, how do you look at insurers today? I mean, are we doing enough? Are there things that you would ask us to watch out for, ask people to be careful about, or are there any nuggets of wisdom you would like to share with us in terms of the responsible use of the data itself?
Yes, thank you very much, Vishwa. It's really very interesting questions. Of course, this is going to be very important in, again, encouraging more collaborations with academia and industry to developing standards so that we can all use new technologies, but not introducing any prejudice for the less insurable categories. So this is very important that we create such platforms that academia can work very closely with industry. To insurers, as we know, they would like to develop insurance products and consumer data, including feedback collected from consumers, reflecting their demand, which are not owned by academia and policymaking bodies. On the other hand, scholars with computer science, business, public health and law, they have background, unique knowledge and expertise that are not owned by companies. So it is really important to have collaborations between insurers, academia, and the policymaking community in a way that they can complement each other by bringing their strengths and developing better standards. So the importance of such collaborations is stressed by the latest research on inclusive insurance. Scholars developing risk theory and techniques to construct models predicting the probability of households falling under the poverty line. So they find that, for example, microinsurance alone is not sufficient to reduce the probability of falling into the area of poverty for specific groups of people, but it suggested that additional aid is needed, particularly from the government. So universities and researchers can help here because we have these challenges, and we believe that universities and researchers can help to identify the factors that result in prejudice. So, for example, here there is numerous research investigating whether poverty and lack of insurance are associated with perceived racial and ethnic bias in healthcare. So here, the major challenge that we face, the academics face, is the lack of data, and often researchers have to rely on surveys or interviews, which limit the scope and explanatory power of our research. So this is where insurers can help, and we see several successful examples between universities and academia, between university, academia, and the industry collaborating to address also the fairness issue. In the case of, for example, Cambridge University, they have been cooperating with Aviva in a project on machine learning fairness. So fairness here is a challenging concept, traditionally difficult to define in an algorithm. So all this research that we are observing at different levels are extremely significant to create impactful research and produce research for, again, helping the companies and reaching insurance for the neglected part of the society. Thank you.
Thank you, Professor. Just to remind the audience, you can keep on your questions coming. We'll take the questions as they come in. I have one question which is open, and three questions which have been answered. In the typical way in which I think about it, user-defined answers are always better than specialist answers. TripAdvisor, you go and see which hotel has been commented the most positively by the users, get there. So assume those three answers are spot on. Let me just take the one which is still not answered. It comes from Ashish. Was a question. Maybe Chowki and Professor, you can double team for that. Health insurance carriers should be fighting for providing the best of experiences and services to their customers instead of the price war. Is it possible to have a shared ecosystem by all healthcare insurers and underpinned by data sharing, externalizing their best of proprietary IT systems, and basically working collaboratively within a framework and standardizing? What would you think about this as an option? So maybe I invite Chowki to start, and then maybe Professor can chime in.
Right. Thank you very much, Biswa, and thank you, Ashish, for the question. It's true that there is right now a lot of competition in the health insurance sector with a lot of startups who are gathering more and more funds, arising, from no legacy as big insurance company like us who has a strong legacy, whether it's about IT system, whether it's about also the usage and the collection of data. Yes, there is competition. There is some push at European level. I will talk again about European level to make sure that there is this open, what I shared before, there is this European, common space, especially on the health sector, to make sure that we can have the possibility to leverage to a customer, the best quality of data that help us to better price, to be fairer. So I believe that, by sharing and also by making sure that there is a kind of common infrastructure nationally and also maybe at European level, we can definitely serve better the customer and avoid, this kind of fragmentation of the sector. Then competition is totally fair and productive. It's good also to have, several competitors trying to provide the best health insurance. Then definitely we need to focus on the fact that the degradation of the services shouldn't be, in some way the consequence of this fragmentation. But yes, there is a lot of initiative nationally. I can mention Germany, France, UK, who have this kind of health data hub. Maybe you heard about it, managed by local parapublic governments, health data system, who try basically to work in between the welfare system and private insurance and private also pensions to gather data safely, anonymized, definitely, and make sure that we can perform, high value insurance products. We can also cover, population who are at risk of not being covered sufficiently or misled, by the offer currently proposed by the sector. But yeah, it's a tricky issue. It's very, very important issue that you pointed out. It's a tricky one. I'm a strong believer by the fact that the sector won't regulate himself on this kind of issue, but maybe some incentives for local authorities could help to structure a little bit the way we drive forward without harming, the innovativeness of a solution every insurers and startups are proposing now, and even also harnessing the ability to collect data fairly and use it responsibly. So this is my 2 cents on your question, Ashish.
Yes, I totally agree with Chowki. This is something that it should be encouraged, and data sharing will be extremely helpful for the ecosystem. And we expect that, there is competition, we are aware of that, but this data sharing will be also extremely helpful for the regulators to understand the operations of the companies. And of course, it will help an important partner in this ecosystem, which is the academia, to have access to data and to do research accordingly towards helping for the betterment of research, betterment of advancements in this area. Thank you.
Thank you. I'll probably ask a question to Girish. When you had this explosion of data, the data that you are using to kind of make meaningful decisions for the betterment of the customer segments that you serve, what were the key challenges that you faced, and what you can share with us from a learning perspective, so that people who are starting on their journey can learn from that and maybe not make the mistakes that we inadvertently make when we are the first mover?
I think good question. I mean, it's at first having all that data, and suddenly when you say you can use all this to get so much new insights, that can be quite overwhelming. And what we really had to do was set up a first thing we had to do once we started using data on the cloud for running our AI ML piece is set up a proper data governance model. And this is something which is and that's something I would highly recommend, that you put this framework in place. And that's something which should be at least, if not the board level, at least a level below the board, you would have the ownership of this governance framework, because that's key, right? I mean, or you can, there's so much of data, and I could, the previous panel, I just heard them when they were signing off with their wish list. They talked about using all that data to do to understand completely about the health and provide better healthcare and longer lifespan, so on, which is good. But equally, all that data can also be used to deny, if I may say, insurance to or protection to a customer if the customer's risk is not acceptable. So where do you kind of draw the line that your biases creep in or do not creep in into your and you have to have some kind of framework which kind of allows you to make those decisions. For example, if I mentioned earlier, when you're doing something like underwriting a claim, which are definitely going to impact a customer, as in are you going to take the customer in or provide protection or pass a claim, I think there you need to be much more careful, much more cognizant of the biases that might creep into your solutions, and you need to have certain ways in managing those biases, whether it be in terms of having a human element, like I mentioned, interface with the solution, or any other way in which you can eliminate the biases during the training itself. But there are other cases where we use AI, where biases, even if they creep in, are not so important, right? For example, recommendations. I mean, if you're going to recommend, say, out of 3 possible solutions, you're going to recommend a certain solution to a customer. Yeah, that's optionality. Your customer can choose that solution or go for something else. And a bias creeping in out there really does not impact significantly any kind of so it's and you need to be able to segregate use cases in which you will want to be aware of the biases and eliminate them and be very watchful. And there are certain other use cases where you can really use data and benefit the customers without having to worry about any significant bias. So you need to have that classification, understanding, and have that framework in place to help you do that.
Thank you, Girish. You mentioned a very interesting point of biases creeping in. And I wonder if Professor and Chowki could help with a perspective. When you have biases, which will happen when you use technology from time to time, how do you go about it? How do you address the biases? How do you course correct? How do you rectify? Is that a standard operating procedure that you would recommend to people who are going through this?
I can start, if you don't mind, Miriam. So yes, sorry. Yeah, the challenge of AI fairness, if I can mention that on more general way of bias, has been already there in the insurance sector. We are already, heavily regulated by some insurance directive regarding the way we use, our actual model and the way you use also data to avoid fairness. It's part of European GDPR, General Protection and Data Rights. So I think data regulation. So I think it's still a challenge with the massive use of more and more, not massive, but more and more usage of AI currently. There is no one-size-fits-all solution. I know that a lot of tech companies are working on, they have, research team working on such topic of AI fairness, for instance. There is some tools already available on the market who try to figure out how to manage, biases. Then there is different kind of also metrics which exist, looking at gender parity, looking at also different way of detecting biases, finding solution. At this stage, we try to figure out this topic by making sure that data is diverse, is of quality, is mature in some way, is collected in the right way. I think it's the best way first to avoid the bias in data, which is the most vicious one in some way. But then moving to new forms of biases, who could be also depending on the cultural area you're living in Europe, in Americas, in Asia. I think there is different interpretation of what is, fairness, of what is discrimination, etc. So there is a way. There is not a way, sorry, to tackle this topic. There are several ways, but one of the key ways is to have clean data set, diverse data set, collected wisely, make sure that they are of quality, so that you can be the fairest possible in the way you use these data sets for pricing, for the writing, for managing any premiums. So this is the first way I believe we are working on as an insurance company with a global footprint. Then it's still, and I will pass the ball to Miriam, it's still a research issue. We are also doing a lot of research at AXA with some external partners, with Sorbonne University, with the PFL, on working on this topic, especially on fairness of AI invention sector. And we can see there is not one size fits all solution. And we can see that we were just looking at the top of the iceberg, and there's a lot of things we are not aware. There's a lot of unconscious bias we are having, and we're not able to detect so far in the way we drive also our models. So it's a tricky question. There is no easy solution, but there is some safeguards that we implemented to make sure that some of the most visible ones or obvious one could be tackled, and we can find the solution to answer properly to these issues for customer and clients. But maybe, Miriam, you want to add some elements on this topic?
Yeah, I agree with Chucky. It is really a tricky question, and there is no easy answer. Of course, there is competing efforts in academia working on these aspects, on the specific biases. There is research going on de-identification or re-identification research, so that this ensures that individuals' privacy is reported in data analytics. And one of the most effective ways to do this is through strong de-identification of the data. In essence, storing and sharing the data without revealing the identity of the individuals involved. On the other hand, there are a group of researchers investigating the techniques to identify the de-identified data sets. So the computing efforts will result in more robust measures of focusing on these biases, at the same time protecting individuals' privacy. We also work on different areas with regard to the developing more comprehensive and effective regulatory tools, so that insurers, in this context, they need to keep themselves informed about the latest regulations with regard to these biases. So Jalki has given the example from GDPR. This is very important. There are examples coming from other countries, such as China, having a China Banking and Insurance Regulatory Commission, which is regulating all these aspects within the industry. So these are, of course, very, very important areas that requires further research and further collaborations between academia, industry, as well as the regulators. Thank you.
Thank you. What I was fascinated listening through to all of your perspectives is, this looks like an area wherein there is a need for a lot of collaboration, cross industry, cross platforms, cross academia, so on and so forth. So I'd like to invite all of you, or whoever wants to chip in, maybe start with Adrian. How can, as an industry, we collaborate to really address some of these big ticket items which are there on the table, right? I mean, I'll give you an example. I run every day. I know that my insurance company may have data about me that I run, right? I have this fear in my mind. The day I stop running, maybe they are going to increase my premiums because they know that I'm not running, right? Or I have a friend who doesn't run and he says, oh, I don't want to buy an insurance from this guy because he knows that I don't run. And I'll basically make sure that I do not discriminate positively with respect to any of the services I provide with you. So I was just wondering, as an industry, as a collegiate, how do we address this problem? Because at the end of the day, I believe this is a very noble industry, unlike a lot of adjacencies that we have seen. I mean, the aim here is to help people live healthier, longer, have a peaceful mental happiness, so on and so forth. So how should we go about this collaboration piece? Maybe all of you can share your thoughts and chime in, starting with Adrian.
Thanks, Bishwa. No, I think it's a fascinating question, simply because there is no right or wrong answer. There's a lot about test and learn, and there's a lot about, especially with regulators. It's not, in a way, the life that our customers are living. You, for instance, about running every day and stopping when you're on holiday or anything like this. your life has no boundaries, right? And your insurers only know a share of it. So ultimately, what the role of the insurer for the society, for your own coverage, but also in its own interest, align with yours, is to make sure you are always incentivized to keep a healthier lifestyle. Running is one part of it, but it's not only the only one. And at the same time, as an industry, we also foster value for you. I think the Vitality program is a good example, but double-clicking on Ashish's questions about the healthcare ecosystem and the claims part, there's a lot of inefficiencies. There's a lot of ways data and collaboration as part of ecosystems, healthcare industry, health infrastructure, health insurers, regulator, and data protection authorities could work together and close that loop. Bring back to what the consumers in the end deserve, which is fair, good level of protection for what their risk is about, and be able to access it, and be able to access it consistently as they go along with their life. I can share like a real life example. That's something we've actually built in China, which was realizing when we entered health insurance that the biggest challenge wasn't about data and pricing. The biggest challenge was about infrastructure and claims. And obviously also the complexity on claim assessment. And what we did to come up with a solution as an ecosystem was to basically create an open platform where insurance could actually be able to log in, straight away access to all the API connected medical, public and private infrastructure, and be able in real time to look at claims that were, as we were speaking, being filed at the hospital, part of it being automated, so auto adjudication, and part of it being left to the insurance companies and its own risk appetite to decide whether to pay or not. It is a way where you can actually really, as an industry, move the needle, being more efficient, being more affordable, being more real time in the way you accompany individuals, customers, but also healthcare partners and regulators, in the way you protect and create value for end users. And in my view, it could be one example, but I'm sure everyone in the panel have several other examples to share as well.
Thank you, Adrian. Maybe I'll just invite anybody who wants to come in to share a little bit more. Girish?
I think there is, when you look at what has happened so far in the industry, and you look at the regulation as well, most of it is around data privacy, whether it's GDPR or even the customer data protection in India, which is in process. Now, I think a lot of work on that side, but on how to use the data, it's still individual insurers who are kind of trying to make sense of, and we could hear other colleagues on the panel kind of talking through each of their journeys in this space. I think collaboration will definitely be required to kind of work out what I would call how do we kind of measure the boundaries of our bias in what is it that we can use, what is it we should not be using, and this is something that needs to come out of a lot of discussion, be it with the regulators, be it with the academia, and with the insurers, and even with say the providers. So there's a lot of evolution that is required. And that is only going to come through with everyone in this ecosystem collaborating and working out where and how we should define the boundaries of this space.
Okay, thank you, Girish.
Yes, if I may jump in and to build on what just shared Adrien and Girish, I agree on the collaboration part. Something instrumental, something more than important to focus on today, especially with the design of platforms. I can also mention that at AXA, we're working on a digital healthcare platform with a tech company, with Microsoft, which enable us to follow the hand-to-hand journey of a customer, looking at his lifestyle, but not only, but also looking at the way health claims are assessed, managed, and also the connection to hospitals, the fact that we have a network, we are building up a network in certain countries. There is some initiatives which are basically focusing on partnership and collaboration to make sure that there is an ecosystem behind a customer experience, behind the life of a citizen, basically. So especially focusing on supporting them on what matters. So family, healthcare, lifestyle, protection of assets, etc. So having this ecosystem focusing on health and building up on that will enable, insurance company to be even more noble than the role we currently have, to be instrumental in the way we are building up the future of society, the future of European societies, of Asian societies, or American societies, and the way we want to put data-centric and with a human-centric approach. I think data-centric is linked also to human-centric approach in the way we are building the ecosystem and provide new solutions, whether it's about healthcare, P&C, or even more generally financial services. So the spirit of collaboration, entanglement, and end-to-end journey is very important for every insurance today, and platforms could be, of course, one of the new naming or new models of designing, the future of a customer experience on insurance and beyond. This is my say on the topic.
Thank you, Chowki. I think we are almost at the end of our allocated time. So I'll probably invite Isabella to come in while I just share a few final thoughts. I think it has been a real pleasure learning from all of you in terms of how you look at this piece of work. That is, the best way to describe this will be, I'll just give you an example. We know sometimes what we know, right? I'll just give you an example. I know probably cricket, how to understand it. We don't know what we don't know. I don't understand golf that well. So those are two concentric circles, but there is a very big circle beyond it. We don't know what we don't know. So I think that the journey of evolution of artificial intelligence and machine learning, we are at the beginning of a journey wherein we will have challenges, wherein we will have opportunities. But I think the best thing that we all can do is to stay true to the fundamental fact that we should always use this power of data for the betterment of the societies that we live in and we serve. And as long as that's the North Star, I think through collaboration or otherwise, we will find a way to make sure that the mankind becomes better and more powerful by the use of these technologies. That would be my sense. And as we are leaving, Isabella tells me there is one question that we can take, one final one. The question comes from Suna, and the question is, does the panel think that smart contracts and parametric-based triggers will benefit customers and markets? For example, extrapolating the PSA levels for men to anticipate and proactively manage or treat prostate cancers or precancerous cells in cervical smears or mammogram results, etc. Thank you. Anybody wants to go in? Maybe we'll just have one. Smart contracts and parametric-based triggers. Maybe Adrian, you want to take it?
Sure. Quick answer. I think it would be yes. And the reason is very simple. The role of insurers needs to be much more active and proactive in helping individuals manage their life, their health. And I think Biswa from AIA, I'm sure you can only agree with such a statement.
That's true. Thank you all. Isabella, back to you.
Yes. So thank you very much. It was really a very interesting discussion for me. I made many notes. So thank you to you, Biswa, for doing the moderation. Thank you to all the panelists for really these interesting insights. With that, we are already at the end of this year's New Technology and Data Conference. I would like to thank again to our co-organizer, AIA, making this great conference possible, to our keynote speaker, Johnny Broomberg, the moderator, Bernhard, Kotanko, Biswa, to you, and to all the panelists. We would welcome your feedback. And at the end of this conference, you will then have a pop-up where you can provide it. So with that, I wish you a pleasant morning, afternoon, or evening, and hopefully see you next year again. So thank you very much and goodbye.